Let's kick it off. Last year was carnage in your market.
Indeed it was.
It was. Please make sense of, as you would say to me, look, man, last year was a bit of rubble. Where are we in that? Are we in the birthplace of recovery in crypto?
Sure, listen, we had a fantastic bubble in cryptocurrencies, right? 2017 kind of popped, the bubble popped at the end of 17, the beginning of 18. And last year you realized just how painful bubbles can be, right? The market was down 90-odd% depending on what crypto you're looking at. I always laugh about the math of that, like, you know, market down 90% is down 60% and then another 65.
But you're still convinced. You're still convinced there's a recovery to be had.
Yeah. So listen, what happened is all the retail frenzy that came up and down washed out, and now you're in this process of handing off ownership from the people's revolution, from retail to institutions, and all the architecture that institutions need to feel comfortable with this is being put in place. And people say, well, no institutions are in yet, and that's all just rubbish. You know, you're starting to see, first in the venture funds, and now in these hybrid funds, institutions like the Yale Endowment. I mean, David Swensen might be the most influential investor in the world investing in a fund that's based in Bitcoin. And so where Yale goes, people follow. And, you know, what's stopping institutions from investing in crypto is a little bit the next guy in. And so it's one of these gigs.
Okay, so we need the next guy in. Who is the turnkey? I mean, there's what? Non-deliverable forwards at Goldman's. There's the infrastructure at Morgan.
So it's been custody in some ways. So Fidelity had announced a custody solution. It's been delayed a little bit because the U.S. government keeps shutting down. But I think last I heard it's, you know, March or so. The New York Stock Exchange is a crypto company called Bakkt. That's around the same time. And so all these things are just getting started. You know, February, end of this month, beginning of next month, middle of next month, you're going to start seeing custody come online.
And that's the turnkey moment.
It really is. And so there's 4 or 5 really decent custody solutions. All of those custodians are working with institutions. They've got, you know, Fidelity's got 200, 300 customers lining up to be customers. And so they're not going to all rush in on day one. They're going to want to see water run through the pipes. They're going to want to, but over the next 6 to 12 months, you're going to start seeing institutions put a small amount of assets, of their assets. Now listen, a small amount of institutional assets is a lot of money. And we've kind of hit an equilibrium in this 3,400, 3,600 zone. Could Bitcoin go down? Of course it could. You know, all markets can go either way. But it feels like we're just kind of grinding along the bottom, and the next move will be significantly higher.
If those customers come in and that momentum builds, so if the floor is 34, 36, call it 4,000 for cash on a good run, what can you get on an uplift for the rest of the year if interest rises institutionally?
You know, if you look back on any market, when you have these bubbles that go up and down, we're not going to bubble back up.
Okay.
We're going to grind back up. But if you start buying, you know, could you go to 8,000? Of course you could. And then also you're like, wait, that just doubled in a year. And then you see the enthusiasm pick up. I think what's telling is in 2017, we got almost to $1 trillion of market cap. And if you actually add the coins not in circulation, over $1 trillion in a frenzy. And I think in the next run-up, you're really going to separate Bitcoin from a lot of the other cryptocurrencies. I think, you know, there's 118 elements on the periodic table. Only one gold is valuable just because it's store of value.
And is that what Bitcoin represents to you in that world?
Bitcoin is going to be digital gold. It is going to be a place where you have sovereign money. You know, it's not U.S. money, it's not Chinese money. It's sovereign. And so sovereignty, it costs a lot. It should cost a lot, right? It shouldn't be. And so people say, well, Bitcoin's slow and Bitcoin's expensive.
Yeah, they are. I mean, what about that criticism? Well, it's slow.
Have you ever been to Fort Knox? Like, we keep gold, surrounded by guns and deep vaults, and it costs money to store gold. Like, gold's got store of value because people say it's valuable, and you know, we mine it, you know, and so the idea that it's supposed to be free and cheap is actually misguided. And so I actually don't think last year we talked about crypto, everything was going to be a version of Bitcoin, and that's not necessarily true. You know, every blockchain doesn't need the same level of security. It doesn't need to be surrounded by, you know, tanks and guns protecting it. And so you're going to see other versions of cryptocurrencies that represent, call it less secure. If the blockchain is for secure value transfer, if I'm selling you my digital glasses and they cost $1 each, you probably need a little less security and a little less safety than if I'm transferring millions of dollars.
I'm going to turn left field because I know you had a late night. I just want to pepper comment on markets. We've had this amazing relief rally in markets. Trump's going to potentially extend the China trade talks. Look, there's a glint in your eye. Do you trust this equity market, quoted old-fashioned market rally?
I do. Listen, the Fed has gone on hold. They've paused. That's a big deal. There's a ton of buying power in the U.S., mostly from buybacks. We think there'll be $1 trillion of buybacks this year in the U.S. stock market. That's a lot. And so you've got support from corporate buybacks. You've got a support from the Fed. Growth is fine in the U.S. A little slower than last year, but not collapsing.
What's your top trade?
Listen, I think being short dollars versus emerging markets is a great trade right now. Again, Fed on hold. Emerging markets got beat up last year. And I think long equities.